Welcome to the Deep Dive, your shortcut to understanding what really matters. Today, we're taking a focused look at a major player in Indian life insurance, SBI Life Insurance Company.
That's right.
You shared some really interesting material, their latest earnings called Transcript, the audited financials, and, those official updates they send to the stock exchanges.
Mhm.
So our mission today is basically to pull out the key insights. We want to understand their strategies, their financial health, and, well, where they sit in the market right now.
And it's a big year for them, too, their 25th year of operation.
Oh, right. Good point. Okay, so let's just dive straight in. How
Yeah.
did they actually do? What's the overall picture?
Well, looking at the full financial year 2024-25, the picture is pretty compelling, actually. They reported a big jump in profit after tax, 27% up, hitting INR 24.13 billion.
Okay, 27% is significant. And what about the premiums they collected?
Their gross written premium, which is, the total premiums collected, that saw a decent 4% increase, came in at INR 849.9 billion.
Okay. What really jumped out at me, though, was the individual new business premium. They grew that by 11%, right?
Yeah.
To INR 263.6 billion.
Yeah, exactly.
And the interesting part there, I thought, was that they actually grew faster than the rest of the private market. What does that tell us?
Well, that outperformance is, I think, really key. It shows their competitive strength, They hold a 20.8% share of the total new business premium in the private market.
Right.
And it's even higher for just individual new business, 25.3%. So they're not just big, they're genuinely leading the pack there. And their individual rated new business premium, that grew by 12%. Plus, if you look at the last 3 years, their compound annual growth rate, the CAGR, is 15%. That's better than the industry average.
So consistent growth suggests the strategy is working.
Definitely. It points to a robust strategy and pretty effective execution in getting those new individual policyholders. They did mention some, let's say, headwinds in the group savings business. But on the flip side, group protection saw strong growth in the last quarter, Q4. So they seem quite dynamic in how they handled different segments.
So adding it all up, the total new business premium was what, INR 355.8 billion?
Yep, that's the total figure.
But it's not all about new customers, is it? Renewals are a big piece of the puzzle, too.
Oh, absolutely crucial. Renewal premiums grew by a solid 14%, and they now make up 58% of the total gross written premium. That's the majority.
Shows the value of keeping customers.
Exactly. It highlights that customer retention focus and the long-term value they get from their existing base. We also saw a 9% growth in their annualized premium equivalent, the APE.
Right. APE is that standardized measure, helps compare sales across different product types.
Precisely. And notably, their individual APE grew even faster by 13%, reaching INR 195.9 billion.
And they issued a lot of policies.
They did. Over 2.2 million new policies, and now cover 25.5 million lives in total. The other thing is, the sum assured has also grown significantly.
Suggesting people are taking out bigger policies, more coverage.
Seems like it.
Hmm.
Could reflect, maybe increased awareness about needing financial protection.
Okay, let's switch gears a bit. How about profitability
Um,
and efficiency? Their value of new business, the Vaughn B that hit INR 59.5 billion, up 7%. Vaughn B is always an interesting one. It's like the present value of expected future profits from the new stuff they sold this year.
Exactly. A key metric for future profitability. And their Vaughn B margin for the whole year was a healthy 27.8%.
Okay.
But what's quite interesting is that this margin actually jumped up to 30.5% just in the fourth quarter.
Oh, really? Why the jump just in Q4? What drove that?
Well, that's a good question. The company mentioned a couple of main things. Earlier in the year, they had a higher share of ULPs, those unit-linked insurance plans.
Right, the ones linked to market investment.
Yes. But then in Q4, there was a kind of strategic shift in their product mix, more towards traditional products.
Ah, okay, so different products must have different impacts on that margin.
Precisely. ULPs can sometimes boost near-term profitability because of higher initial fees, perhaps. The later shift to traditional products, well, that might have a different margin profile, but could be driven by, say, changing customer demand or maybe a strategic move for more long-term stability.
Got it. And what about the overall value of the business? Embedded value.
That also saw really strong growth, up 21%, reaching INR 702.5 billion. That's the value from existing and new business combined.
Okay.
And the profit generated during the year from that, the embedded value operating profit, grew by an impressive 20% to INR 117.8 billion. That gives a strong operating return on embedded value of 20.2%.
So the underlying value is growing nicely.
Very healthily, yes.
Yeah.
It indicates the business is generating solid value.
Looking inside that operating profit, what were the main drivers? Seems like persistency people sticking with their policies helped.
It did quite a bit. Persistency had a positive impact of INR 227 crores, and mortality experience was also favorable, meaning fewer claims than expected, contributing another INR 423 crores positively. Even expenses had a small positive variance about INR 17 crores. So yeah, suggests good risk management and better customer retention.
But I did notice their operating expense ratio, the OPEX ratio, ticked up slightly to 5.3%. And the total cost ratio also went up to 9.7%. Is that a worry?
Well, it's something to watch, obviously, but while those ratios did nudge up a bit, you have to see it alongside those improvements in persistency.
Ah, okay. Context matters.
Right. Their 13th month persistency, so after 1 year, improved to 87.41%. And the 61st month one, after 5 years, jumped significantly to 62.69%.
That 5-year jump is pretty big.
It is, and keeping customers longer is vital for profit down the line. So those improvements likely help balance out the slight cost ratio increase. Plus, their death claim settlement ratio is still incredibly high at 99.4%. And the mis-selling ratio is tiny, just 1.02%. That says a lot about their customer service and, ethical practices.
Definitely. Okay, how are they actually reaching customers? Distribution channels, bank assurance, selling through banks, mainly SBI and the regional rural banks. That's still huge for them,
No,
right?
yeah, Cornerstone. It contributes 61% on a total APE basis, and it grew by 9% in individual APE.
And even the productivity within SBI branches went up.
It did. Individual APE productivity per SBI branch grew 9% to INR 5.4 million. So those bank partners are getting more effective.
But the agency channel, selling through agents, that seems to be where a lot of the momentum is.
Absolutely. Huge momentum there. Individual new business from agents shot up 28%. It now makes up 27% of their total business.
Wow, 28% growth.
Yeah, and the individual APE from the agency channel grew 23% to INR 59.5 billion. Agent productivity also up by 20%.
They brought on a lot of new agents, too.
They did, over 97,500 on a gross basis, which is massive.
But the net number was slightly down.
Yeah, slightly negative net addition. They mentioned a process of de-weeding inactive agents.
De-weeding. Interesting term. Why focus on removing inactive agents, do you think?
Well, it probably suggests they're focusing on quality, not just sheer numbers in their sales force. Get rid of the inactive ones, improve overall productivity, maybe cut down on compliance headaches, and make sure the active agents get the support they need.
Makes sense. Focus the resources. And they also opened new physical branches.
Yeah, 70 new branches. And they specifically mentioned targeting Tier 3 and Tier 4 cities, smaller towns.
So pushing beyond the major metros.
Exactly. It ties in with that agency growth, I think. Tapping into markets where maybe that personal touch, the trusted local advisor, is still really important. And we saw the agency channel share of individual rated premium increase, too, from 28% to 30%.
So its importance is definitely growing. What about other channels?
They mentioned growth there, too. Direct sales, corporate agents, brokers, online aggregators, all contributing.
Okay, let's talk products. They launched 4 new non-ULA products. Smart Platina Supreme, Smart Pachat Plus, Smart Platina Young Achiever, Smart Future Star. That sounds like a deliberate move.
It does seem like it. Historically, ULIPs were the big thing for their individual new business, like 70% for the whole year we're talking about.
Right.
But they did see ULIP sales dip in the last quarter, which suggests, yeah, a growing focus, maybe growing customer interest, too, in those traditional non-market-linked products.
And protection products, pure life cover.
That saw good growth, too. Individual protection new business reached INR 7.9 billion, and Q4 saw a big 40% jump compared to Q3.
Okay.
Group protection was also strong at INR 33 billion, and their credit life business insurance linked to loans grew 11% to INR 25.2 billion.
So overall, protection is now 10% of their APE, around INR 20.5 billion.
Yep. And they also did substantial business in annuities and pensions, INR 71.6 billion in new business there.
Looking ahead, they gave a target for the product mix this current year, FY25-26, aiming for 65% ULIP, 35% traditional, That's a 5% shift towards
No,
traditional.
it is a noticeable shift.
What's the thinking behind that rebalancing, do you reckon?
Well, it's likely a mix of things, responding to how the market's evolving, maybe potential regulatory shifts down the line, or just seeing more demand for guaranteed returns and less volatile options, especially given the economic climate, perhaps.
And they gave growth guidance, too.
They did, pretty specific, targeting 13% to 14% growth in individual APE for this year.
How do they expect to get there?
They see sort of low double-digit growth from the bank assurance channel, steady, but they're aiming for a more ambitious 25% growth from the agency channel.
Driven by more agents and better productivity, presumably.
Exactly, more active agents and getting more out of each one. They also stress their focus on non-participating savings products, the guaranteed return ones. They think those remain attractive even if interest rates potentially fall because of that guarantee aspect.
Makes sense. Now, the regulatory side, there's always chatter about potential caps or changes to bank assurance. Did SBI Life say anything concrete?
Well, according to them, no. They said there have been no formal discussions or specific guidelines from the regulator, the IRDAI, about any restrictions, despite, all the speculation you hear.
So nothing official yet.
They emphasize the regulator usually consults first, and they haven't been part of any formal proposals on that. So as far as they're concerned, it's business as usual for now.
Okay. Let's just quickly touch on some key strategies they highlighted. Sounds like a big push on the agency network continues, their Agency 2.0 initiative.
Definitely. Big investment there. And a clear focus on getting agents to actively sell more traditional and protection products, not just ULPs, perhaps.
And technology is a big part of it, too.
Oh, huge. They mentioned 99% of individual proposals are submitted digitally now, and over half, 54%, go through automated underwriting.
Wow, that's efficient.
Yeah. That focus on digital, improving customer experience, it seems core to their long-term plan for, sustainable, profitable growth.
Anything else stand out strategically?
They mentioned refining how they allocate expenses, which led to a small adjustment in liabilities for the non-par segment, but they framed it as just getting more accurate based on, time and motion studies.
Okay, internal housekeeping.
Sort of. Also focusing on boosting pure term protection within their protection sales mix. And their solvency ratio, while it dipped slightly quarter on quarter, is still very strong at 1.96, indicates they're well capitalized.
Good. And what about their non-SBI bank partners?
Ah, yes. They mentioned experience varies there. Activation rates for agents in those banks are generally lower than with SBI. And the product mix tends to be more non-ULEP, maybe 70% non-ULEP, 30% ULEP.
Interesting difference. And they racked up quite a few awards, too.
They did. A whole list, financial performance, digital stuff like AI analytics, CSR, customer service. Seems like they're getting recognition across the board.
Okay. And just quickly on the digital transformation, again, multilingual website, lead management systems, in-app purchasing.
Yeah, all pointing towards building that seamless digital journey. Secure infrastructure, data protection, all the key elements seem to be there or being actively worked on.
Right. So let's try to wrap this up. Our deep dive, it really shows SBI Life had a very strong financial year in 2024-25.
Definitely.
Impressive profit growth. They seem to be strategically shifting their product mix towards traditional plans, investing heavily in that agency channel,
Yeah.
all while keeping a really solid financial base.
For me, what's particularly striking is just the sheer scale of that commitment to the agency force. Adding nearly 100,000 agents, even with the de-weeding, it feels like a very deliberate bet on, the human touch, on personal advice in the Indian market.
Yeah, it's not purely a digital play.
Not at all. It suggests a pretty nuanced understanding of their customers, I think.
And for me, the aha moment is maybe how proactively they're adjusting that product strategy. The clear move towards traditional, the big growth spurt in protection, especially in Q4, that agility seems key to their success, and that improved VONB margin later in the year.
Yeah, good point. Which brings up a question for you, the listener, to think about. How do these specific strategies, this performance from SBI Life, how does it mirror or maybe even influence the wider trends in India's financial services and insurance world? What could it tell us about what Indian consumers are prioritizing now when they think about financial security, about investment? It's definitely a useful lens to view the whole market through.
Indeed. And if you want to explore more, you could certainly look into the evolving regulations for insurance in India, or maybe dig deeper into the differences between ULPs and traditional plans. Lots to think about. Thanks for joining us for this deep dive.